Greetings, friends. Keith Prather here again with an NCM Marine Demand Index update. Uh, so this month, again, I'm going to have to say this across all the measures. Government data is sporadic, and we're having to forecast some government data measures to be able to plug into the index. As you know, this Marine Leading Index for NCM incorporates a number of different economic measures to try and create this curve or to create this forecast. And as a leading index, the way it works is we take those economic indicators or those drivers that drive sales and drive demand for boats of all types, and we run some algorithms against those, and it creates this index overall. But what it's doing is it's telling us what the environment will look like over the next anywhere from 3 to 6 months. And so this is looking out and looking forward. And what we're getting here is an interesting signal in November. The index came in at 109.5, which is actually up from October. So it's showing that some of those economic conditions, those underlying factors are actually improving for future boat sales of all types, whether we're talking about pontoons, yachts, fishing vessels, PWC, all those areas. It's also surprisingly up about 12.4% year over year. Now it's going up against some easier comps. We had a bit of a dip going into the end of last year, a little bit of uncertainty with the election kind of going into it. We will typically see that across most election cycles. So we've got to take a little bit of that with a grain of salt, but it's well within the normal long-term average rate of growth. And so at least that's positive. Now on the production side, we have a producer price index that we watch. And I've got to give you a bit of a caveat here. This data is lagging by nearly a full month. One of the reasons why the videos and the data is coming out so late this month, and especially the briefings, please read through the briefing if you haven't taken a look at it, um, is that we're waiting on government data. Government data is still lagging. We're still getting October and November data starting to trickle through. Some economic measures that some of them we would have included in these indexes, some of them we don't, were based on survey data and surveys that were taken during the government shutdown. And because government workers weren't working, obviously they weren't doing the surveys. And so we're actually going to have a data gap, a big hole where we don't know what really happened in part of October and then a big chunk in November. So with that in mind, just take this with a grain of salt. So the producer price index for boat building actually went up. So 2.8% higher year over year. You can see the trend. It's still well under the long-term average, but starting to recover a bit and starting to gain a little bit of momentum. That's interesting because the way we look at this data is that this is a kind of a supply demand measure. When prices in the boat building world are going up, it either means that number one, demand is exceeding supply, and we start to see that tighten a little bit, or it means that input prices are higher. And right now, we're speculating that a little bit of this growth is because the input prices are higher because of tariffs and other factors. What we don't know, though, is how much of this is demand driven and how much of it is consumers getting ready to go out and spend and make big purchases. So we got to continue to watch it. I'm just giving you the caveat because I probably need to look into, it's probably going to be into February before we get really clear, clean producer price data. Even once we get the January data, which will be covering November, you're still going to see a lot of noise in that producer price index. Retail sales, again, I've got this across a number of different factors, but I want to apply this one to marine. If you watch the macroeconomic report, it's going to feel like a repeat, but I want to tie it to marine sales for a second. Overall, consumer retail sales are still very strong, as you can see in the forecast here. This is our forecast. We have a cone of variability here that we watch. The downside risk to this is not very strong. Go back and watch the macro data. I go into a lot of detail on this. But in the marine sector, we've got a lot of different segments of consumer buyers in that mix. We have some that are going to be in the fishing segment, and some of the hunting segments that are going to be seeing their incomes actually go up considerably. Anything and anyone that's going to be more in the blue collar sectors like construction, manufacturing, petroleum, oil and gas, got a little bit of pressure there. But anything in those sectors looks like we're continuing to see good, strong wage growth, and the outlook through 2026 and all the way through 2027 is very strong. I'll give you a quick anecdote. I was down in the DFW area, and this year, just in Texas alone, They're going to have to build out 80 new power plants. Data center expansion is exploding. And I talked to one construction executive who told me that he gave most of his employees anywhere from, he just said, $50,000 to upwards of six figures in bonuses this year. And so you can imagine that a lot of those families are sitting on that cash. Some will use it for debt relief, but some are going to go out and they're going to make brand new purchases. And I think in the spring, when you see that, and then when you see other benefits coming from the tax bill, as consumers get an average of, upwards of $2,500 per household, you're going to see a bunch of them go out and start to make some purchases. So I think we really want to watch the first half of 2026 to maybe see an uptick in some purchases. I think the pontoon category, which has been strong, should do better. PWC, we may see a little bit of an uptick there, um, but it might remain a little more sluggish. I think in the upper end categories, with the stock market surging, what you're going to see in the upper end power boating categories should improve as well. And I think you may see outlooks for a lot of wealthy individuals improve, especially those, again, tied to the construction sector. I think the residential housing market improves. And I think all of that is sort of again, I use this metaphor, but the tide that lifts all ships. I think you could see some overall improvement, especially in any of the upper end sales. And then I think we pick up some of those lower end categories and they kind of grow with us. So, anyway, I'm going to keep our eyes open for that. Again, as I said at the outfront, the GDP outlook for 2026 is much stronger than expected. And I think that that's a good signal. Unemployment stays steady. We don't see a lot of inflation. In fact, we see inflation cooling, and we see interest rates maybe being trimmed by another quarter point next year. I think all of those, again, are positive catalysts for the marine sector overall. So, a couple items to watch specifically to this sector. So, interest rates. 80% of marine sales are financed, and a lot of estimates show that 1% rate cut can save about $100 to $200 a month off of the standard marine loan. So the Fed's already trimmed 75 basis points in 2025, and they're expected to go at least another quarter point based on what they're telling us. But we think, based on what Wall Street is saying, that maybe we get another 50 basis points between 26 and 27. And they could even be more aggressive on those cuts, well, once we see a turnover in Fed leadership sometime, in the May period. Mild loan requirement tightening. So there are some banks out there that are starting to see just a little bit of pressure, and we're seeing them worry a little bit more about some consumer debt. We'll see if that changes and see if that grows in 2026. It was a weak, what we call a weak signal, kind of coming into the end of the year. We want to see if that weak signal becomes a stronger signal and if that continues in 2026. So we'll keep you updated on that. And then just remember that the great wealth transfer is just fully in effect. So there are more boat owners today in their 70s than in their 40s, but those older segments are starting to pass their wealth on to younger generations much earlier. They want to help them avoid capital gains taxes. They want them to be able to spend some of that wealth, especially while they're younger. And they're expected to transfer more than $18 trillion in wealth between now and 2030. The problem is that transition. So the types of vessels that we're selling to that older generation over the last 10 to 15 years may look very different from what a newer generation is looking for. And so you may see, some of the slower vessels that are more for leisure and parking give way to maybe more aggressive, faster types of power boating that we could see. So good and bad, depending on what end of the segment you serve. If you serve all of them, it should be good because you're going to see more used inventory kind of come into the market, and then you're going to see more aggressive buying of maybe some of the upper end vessels. So we'll see what happens. Just know that wealth transfer is kicking in, and it's going to accelerate over the next 5 years. And we're really trying to model what that looks like from a retail perspective and specific sales of specific units. So that's what I had for you this month. Again, we're waiting on a lot of data. There's still a lot of pressure out there. We are still worried about what we call the bottom end of the K. So consumers and households that make less than $75,000 a year still see conditions very tight, and we see spending really kind of trailing off for them. I think in the marine segment, what's more important to us maybe is spending in those segments that are 75,000 a year and higher. And I think you could see some softening and some easing of some of the pressures on those segments, and you may see more spending in 2026 as a result. The Federal Reserve certainly thinks that faster GDP growth is available, and it should happen. So we're going to keep that in tune, and that's what we're going to be looking for in 26. So anyway, hope you're all doing well. Like I'll reiterate many times again, I hope you all have a Merry Christmas. You have a Happy New Year, and we're looking forward to 2026. Stay safe, and we'll see you on the other side. All right, take care. Bye bye.